Hey, Mr. Frank, how are you?
What's up, buddy? How are you?
Hey, how are you, man?
I'm good.
Good, good. I have my buddy Andrew Steven joining. He has a quant website on Forex. Last time you missed it, so he's gonna go through it again. uh, God.
He's going through it specifically for me or just for the group in general?
For the group in general.
Okay.
Hey, Andrew, how are you? I don't think Regina is joining us today, but I have Frank on here. I don't know if anybody from our group has joined from our chat. I haven't got anybody confirmed. Let me see. Give a couple more minutes. Andrew?
Hey.
Yeah. You can share the screen if you want up until
Okay.
people show up.
Can you enable screen sharing, please?
Oh, I'm sorry. Yeah.
Zach, if my audio, if you hear a lot of background or anything, just let me know. I'll mute myself.
Okay, no problem. Andrew, I was expecting a couple more people. Just let me just email everybody that we're on. If not, Andrew, we got it all to you're all to ourselves. I apologize if because I'm gonna have you on another meeting next week. There's gonna be 10-15 people there. Today might be a short list, but next week I might have 10-15 people on the I'll send you the Zoom on that.
It's fine.
Last time
Typically,
I
don't get a lot of people to these events. You really need to try and combine multiple meetups, I think, to kind of get decent numbers.
Oh yeah. Sorry.
It's okay. I was planning on going through a strategy today.
Yeah, that's
the
exactly
Forex trading.
Yeah, because Frank is actually doing Forex now. So
Okay.
we're talking to a little people that know a little bit. So
That is definitely one thing I've come across is people who are going to these meetups generally have no background in Forex trading.
yeah.
So they're kind of really not at the right level for a lot of this stuff.
Yeah, I mean, Frank is going to ask a lot of questions, and I will ask a lot of questions. And I know I have to go through a website still to go through it, and
Sure.
on my
So
own.
if you're familiar with their strategy, Frank and Zach, I don't know if you are or not. If you're not, I'll go through this.
I'm not.
Okay. So straddle basically is we place a buy and sell with the expectation that if the pair moves in one direction, either a positive or negative direction, we'll make a profit. So you probably know about trailing stop, hopefully, how that works.
Yes.
Okay, so for straddle, we enter into position, we place a buy and sell. We're going to leave out how we do the stop loss and take profit for the time being. That will come later. But basically buy and sell, if it goes in one direction, it takes out the first stop and then it keeps going, we make a profit. So if it goes far enough in one direction, we're guaranteed profits. Likewise, if it goes far enough in the other direction, the sell side takes out the opposite stop, we make money. So this is a basic trending strategy. So both scenario 1 and 2, if the market went far enough, either positive or negative, we make money. Scenario 3, it kind of oscillates back and forth. So the idea being that if it oscillates back and forth, we take out both stops and kind of make a loss. But our loss is limited to this boundary in between the original take profit stop loss, the 2 stop losses. Does that make sense?
Right.
So what you're usually doing this is you use a trailing stop. So even in scenario 3, if it goes up, your trailing stop for the first one will go up a little bit to kind of break even. So in scenario 3, where you lose money, you only kind of lose one of the trades, and your maximum loss is basically, bounded by this width between the two stop losses. So from a reward to risk standpoint, it's pretty good. What you want in a straddle strategy to get good performance from these things is you basically, when you enter into a straddle, you want to have confidence or high degree of confidence that's going to go in either a positive or negative direction. So that's kind of ideal. So the way that I typically go and do that, there's a couple ways to make sure that this price action will tend to move in either a positive or negative direction. One thing we can look at doing is trading on support and resistance lines. So you think if you buy on the support, it's either going to go up or it's going to break that support and keep going back down. So that's great for like momentum either way. Other ones we can look at is economic news. So if there's economic news that's just come out and it's either going to push the market in one direction or the market's going to play with us and go the other direction, we still have some good exposure to momentum. So we're using, momentum of news to kind of help us push in one direction or the other. And this side, it probably deserves a separate discussion. I have a user manual on this to kind of go through each of these different plots. But basically what this does is it uses machine learning. So we'll forecast ahead into the future based upon economic news that's come out over the last 4 days from the economic calendar, if you're familiar with the economic calendar. So every day, you are? Okay. So basically it builds these forecasting models for each news release type. And each news release type has like 4 different models created for it. We can forecast like 1, 2, 3, 30 days into the future. We can look at forecasting different positive and negative price barriers hit first. We can forecast different price barriers with different reward to risk ratios. We can forecast exceeding a certain price level at a given time. So you can imagine all these different forecasts that you make, we can show them as predictions on a chart like this. This is a forecast chart. So all these things is just like predictions made by many, many different machine learning models trained in different ways. And the idea is that the more skew it is either to the sell side or the buy side, the more confidence we have that it's the model's indicating over a given time span that's going to be biased towards a short position or a long position. So this in itself, for instance, this would be a forecast that would come from different models. So our summary here is 37. So it's economic and fundamental news is kind of short, 85%, so reasonably short. Technical models, which look at just the price action over the last month, reasonably short. And basket, which is looking at comparative moves for your different currency pairs. So if you see down the bottom here, these comparison movements, that's looking at AUD CAD in relation to its neighbors that share currency. So we can see AUD CAD ranked against all the others is reasonably short, but we've built some additional machine learning models here that kind of, one looks somewhat long, the other one looks somewhat short. So I would probably tend to say overall that this market was biased towards short. And we're going to basically just take this short and we're going to try and align it with our support and resistance. So I'm sure you know a support and resistance plot.
Yes.
What they tend to get you to do in courses is they want you to either draw support and resistance on yourself. There's plenty of software that will draw support and resistance lines for you. This draws lots and lots of different support and resistance lines. That's what this trend line graph is showing you. And if you forecast these support and resistance lines, days ahead into the future, like 1 day, 2 day, 3 day, 4 days, up to 1 month, you basically get price movement distributions. So if you look here, for instance, we can see that support is on the right, resistance is on the right-hand side, support is on the left-hand side. So what it's saying is that we see more resistance, heavy resistance, than we see strong support. So it tends to be biased towards, if you're going to buy or sell this, we tend to want to go towards the sell side. So if you look at these recommendations, we see in the higher percentiles, which are just these vertical lines here, it's kind of biased towards a sell. So what I would tend to do is I would go and match this up with my forecast says sell. I'd look at my support and resistance. I would trade a sell on this for order amount that's shown. We can actually get the you can update the order amount and it will give you the actual order that you put in. So sell 800, trailing stop at 48, take profit at 63. And then for straddle, I'll just go 1% all up. So I will then reverse this and sell it at the 760. Sorry, I buy it at the 760, trailing stop at 52, take profit of 78. So that's the straddle that we were talking about. When you have to understand how this is done is basically all these trades have the same maximum loss. So
Andrew, quick question. So to me, when I talk about straddle option, right? You know, you have a long and a short option, put and call. So in this case, when you're talking about straddle, just so that I get, and anyway, a new person just joining as well, just so I can understand. When you're talking about straddle, you're talking about the stops, the stop losses, and the profit taking, or what are you particularly referring to?
So straddle in Forex is different ways of doing straddles. You can buy an option, for instance. The way that you construct it in Forex is that when you enter into a position, you put the buy and sell in. And the way that it's constructed is that if it moves in one direction, the buy and the sell will have the same maximum loss. So this is kind of what this table is giving you here. It's saying that if you put a buy and a sell in together, the buy and the sell will have the same maximum loss, but the profit potential, if it moves in either the buy or if it moves in the sell direction, will be greater because of this reward to risk ratio here. So reward to risk is always greater than 1. So if both have the same maximum loss, if it moves in one direction, either positive or negative, our expectation of profit is always going to be positive. So for case 1 and 2, like if it moves far enough, either the buy or the sell direction, we use this kind of trade setup here. We know that scenario 1 and 2, we're at guaranteed profits. So that's, and all it's doing is it's using trailing stops. So as it continues to move in one direction, it will take out the trailing stop of either the buy or the sell, depending on which direction it goes in. So that's the way it's constructed. And I said, what we're trying to do to maximize our risk-adjusted return is to avoid scenario 3 here. So we wanted to basically keep going in one direction. So to do that, we're going to use our forecast to make sure that the order with the highest amount, the one with the most potential maximum profits, is biased towards our forecast direction. And our hedge trade will have less maximum profit, but will still, in the long run, give us a positive return if it trends far enough against us. So basically, this forecast is helping to improve our risk-adjusted return because we're biasing the order with the highest amounts. In this case, it would be the sell. So we would short it. This is not a good example. This would be the sell. So we would take the sell at 800, and then we would take our hedge trade, the buy, at 1% or below it at 70.80. The idea is that we hope that our forecast is right. We hope that over a given time period, it tends to drift more towards the sell side, which means we'd make more money. But in case we're wrong, and this thing just goes against us, if it goes against us far enough, we'll still end up making a profit. So it's kind of an interesting idea. I trade this. You cannot generally expect a great return with straddle strategies, but they tend to have better risk-adjusted return characteristics. So that's one of the bigger benefits of it to me. Is if I was trading lots of money, I want to basically always hedge my positions. So I know in a given year, as long as the pair trends either up or down, my expectation and profit is going to be positive. A lot of pairs, for instance, in a given year may not move that much, so we may just break even. We use trailing stops to kind of help us improve, adjusted return. So even if it tends to go up a little bit, like in scenario 3, we can still bring up our stop loss and help protect, help save some of our profit before it goes back down. So these things can help. But generally, we're trying to use additional information to help us understand when is the market likely to either go full positive or full negative to help our risk-adjusted return. I'm looking at doing backtesting on just the support and resistance graph for this because it's easier to do from a computational standpoint. Just running a martingale on this. So the way that a martingale would work is you're basically betting long-term that it's either going to go negative or it's going to go positive. So you can imagine here in this period, like 2007 to 2012, as long as it's kind of in this period, if you use a straddle, it's probably just going to break even more often than not. But what we could do is, as maybe our equity curve goes down a little bit, we can start to add to our position with the idea that eventually it will break out in one direction, either short or long, and we would tend to recover our losses. So that's something I'm going to backtest, and that's something you could do in a robot. And I'm going to use the support and resistance trend line to do it. But in the meantime, what I do is pretty much what I said, as I'm using my economic data, my technical models, and my basket models to help get a good forecast, and I'm biasing my larger position in the straddle towards the forecast. So I guess this platform in itself has many questions behind it, like how people are interested how you generate these plots. I had one guy that wanted to go into a lot of detail how this is done. Other people want to learn more about straddles, how you would apply a straddle using this table. So I guess that's more kind of questions over email.
So can we do a pair just so that, you know,
Yeah, I want to see an example,
Yeah,
if
exactly.
possible.
Okay. So
And when I say an example, I mean more of an example of the step-by-step method that you take with the information that you have.
Okay. So let's look at the Euro NZD, for instance. So let's just go down to our forecast here. So our summary says that overall we're biased towards a long position. We look at our economic, it's somewhat buy, technical is very buy, and basket is somewhat short. So we see overall it's a buy. We can start to investigate more of these charts to just kind of confirm that and see if we agree. So that would just be a basic initial step. So we're biased towards a long. We now want to confirm that with our support and resistance. So can we see in our support and resistance table a situation where it's long, where it's recommending a buy? So a lot of these seem to be buys. This would be a good match, for instance. So we see confirmation here. So I would look for one with a reasonable reward to risk. So let's take it at the reward to risk of 1.23. So I would go ahead and I would place a buy at 280 with a trailing stop of 136, a take profit of 168. And then I would place on my hedge trade in the opposite direction, but with a smaller amount. As I explained, we want to try and use the forecast. So we're biasing the position with the maximum potential profits in the direction of the forecast. So that is why we're going to go 1 percentile down usually. So we bought it at the 25th percentile, I think, 25th percentile, and now we're going to sell it at the 30th percentile, opposite direction. That's our hedge. So we would place a trailing stop of 159, take profit of 197 at an amount of 240. So we basically, I'll do this once a week. So it's really not worth updating this every day. You can, but people want to have a life also. In trading and markets tend not to move that much to warrant you placing, straddle trades all the time. So I usually just check this once a week and I'll just keep adding to the position if I get, confirmation. And I said, all I'm really doing with this is I'm betting on a given year that on average, with the forecast help, that it's going to trend more in the direction, it's either going to trend one direction way or the other. Most of the pairs that I trade, they'll have some trend. And I'm hoping that, the forecast is basically giving me that extra edge. So it's going to trend on average in the direction of the forecast over the next month. So this is what this forecast is giving us. It's helping to improve our risk-adjusted return by pushing the one with the maximum potential profits, in the direction of the forecast.
So you're basically hedging your position. That's what this whole thing is based on.
That's what a straddle does. So when they say hedge, when you're hedging, you're hoping that it's going to go one way or the other long term. And like I said, on average, we hoping that it tends to go long. So we do better from a risk-adjusted return perspective if this thing goes long versus sell. But if it turns out we're wrong and it just goes completely short against us, we still make money if we wait long enough.
I have a
That's the
question that might be embarrassing to ask.
Okay.
I see the stop loss. I see the take profit. How do I determine my entry?
Okay, so your entry basically is you can take any one of these that is confirmed with your forecast. So we see multiple different buys here, right? So you have multiple different entry points. You just set the current price. So you could buy this anytime, right? And we would just hit the trailing stop at one of these, so one of these stop losses, and we'd put a take profit in. I tend to look at the reward to risk ratio, so the one that has a reasonably good reward to risk for the entry. So I decided to enter in at the 25th percentile because it had a reasonable reward to risk. And my entry, basically, I do it by time. So I just do it once a week. So I pick my favorite trading day. I go through all the pairs and I go through this process. And the idea is that we're adding more capital on average to pairs that have some bias in a particular direction. So what we're trying to do with that is that when we're doing our entry, it's not so much like we're looking for the perfect entry. We're just trying to add capital to pairs that are likely to trend. That's kind of the reasoning. And like I said, these stop losses here and take profits, they're fitted to these trend lines. So that has like a reasonable range that it should oscillate between. That's those stop loss and take profits come from this distribution graph. So it's saying on average, if you're on nearer supports, a reasonable stop loss would look like what's in the chart shown here, and a corresponding reasonable take profit would be what's shown in the chart.
Got it. I'm still kind of confused, but I get the gist of it.
Yeah. So I would say that it is, somewhat confusing, and that's partly why the tables are there. Like, I'm not going to do these calculations by hand. I can walk you through like the basic take profit. Sorry, what do you call it? The net profit calculation, how that's done. What you have to understand, the one thing that's really important to remember in this table, the way that it works is that each one of these trades, if you hit a buy, if you take it as a buy, if you take it as a sell, every single trade has the same maximum loss. So if you think about it, if every trade has the same maximum loss, but the maximum profit is greater than the maximum loss, that basically means that if it goes in one direction or the other far enough, our expectation of profit is always positive. So that's kind of what we're using here. So that's why it doesn't really matter so much what percentile I enter into, because every percentile has the same maximum loss.
I meant like the exact amount for entry. Like there's like like for the 30th percentile level, the stop loss is 1.7029. So like I'm just thinking in terms of like, where do I place my entry? Is that what the amount is? I feel like embarrassed asking. I know like the answer is very simple, but that's the part that I'm not getting past right now.
The entry is at the market. So when I say pick your favorite trading day, the markets basically this is not an intraday strategy, okay? So it's allowing you to basically move enough within a week that I don't really care if I enter in now, 12 hours from now, etc. This keeps updating all the time.
Got it. So then what's the amount?
The amount is 240. That's your order size.
Oh, so, okay, got it.
I'm going to update that. Maybe people, it's not clear. So I'm going to change amount to order size. So that's what you should be thinking, like how the strategy works.
So that would be like the lot, like order size in terms of what, like, so let's say if I'm trading Forex at a $1 lot size, 0.1, how would that translate with this amount?
So that's when you enter your account size in here. So whatever you have in your account, you hit update, and this will automatically, based upon your account size or your desired level of risk, give you an appropriate order size. And all it's doing here is that 240 is based on your maximum loss. So the more your maximum loss is, as you see, this increase as maximum loss increases, your order size goes down.
Great.
So
Well,
that's why
I forgot the order size, the maximum account size for the order for the, oh my God, for the account that you just showed. What was it? What was the number? Was it 100,000?
so I'm trading at
Oh,
20,000.
20,000. Okay, sorry. I
Yeah.
completely missed that. All right. Got it. Okay, now it's
I-
clear.
Yeah, it changes a little bit on brokers. So it's like how aggressive you want to be, for instance. But I'm happy with this kind of, I don't generally want to have an exposure in my account greater than 5%. So typically, if you look at my brokerage account, maximum leverage is about 5%. You can be more
Got it.
aggressive with this, but yeah.
No, I like to keep, I actually like to keep my risk at somewhere between 2 and 3%.
Okay, yeah, so that's something you would probably just kind of configure over time to see on average where your, your use of leverage was. So yeah, you have to kind of play around with this a little bit, maybe on demo account and see what kind of works good risk level for you.
Got
But
it.
I said the basic mechanics of trading for this is pretty straightforward. I said just once a week, takes me 20 minutes to go through my trades. I'll update them. You can trade a whole lot of different variations on this. If you want to just take a conviction strategy, you might have 2 or 3 different accounts with different strategies associated with them. A conviction strategy, we're exposed to one position. So we'd only trade the buy in this, for instance. That's fine. Also, generally I say with large sums of money, if you want to do this for a living, always play straddles. You can rest, have some peace of mind that it's not going to ever destroy your accounts. So that's one thing. That's
So
nice.
can I ask this? So if you're trading straddles and you're keeping an eye on all the different currency pairs, how do you decide which one to get into? Like what are the determining factors for you? What are you looking at?
So the determining factor is I go down for every single pair. I just look at my forecast, buy. So first thing I go forecast, and then I check my support and resistance to see if I can find a support and resistance that matches my forecast. So forecast is long. There's lots of different entries here, support and resistance, that have positive reward to risk that match my forecast. So check. So I would now enter a trade. I enter a trade in at the maximum reward to risk that I can see are a reasonable reward to risk. I picked the 25th percentile. I think 25th percentile matches my forecast, buy it, and then I'm going to hedge my trade by selling it at a lower percentile, so lower order size, so less maximum profit I can make. Yeah, so that's basically it. Less maximum profit, but same maximum loss. So the 25th percentile and the 30th percentile have the same maximum loss, but the maximum profit is higher in the 25th percentile versus the 30th percentile.
Got it.
I'm also interested to see if people have like ideas they want to try and automate with this. Some of this like economic news stuff is very difficult to backtest because it's very computationally expensive to produce the forecasts. Other things like the support and resistance lines is easy enough to kind of do computationally to kind of backtest this. So like I said, I'm interested in doing a martingale straddle strategy on just the support and resistance lines historically, see how that performs. I'm sure if you don't know what a martingale is, there's a whole different class of martingales.
I have no idea what a martingale is.
Okay, martingale is basically you keep buying or adding to your position until you make a profit. So as soon as your position, so if we're here and it kept going down against us, we kept adding to our position with the expectation that hopefully it's going to go up just a little bit. We can just wait until it kind of ends in profit and close out our position. So no reasonable person would suggest that you do this because occasionally it blows up your account. It goes too far against you, but most of the time, because you get a lot of volatility in your pair, this is 80% of the time, if you look at just a martingale strategy, it'll have a very clean equity curve, keeps going up, and then 20% of the time it blows up your account, right? So there's different ways of constructing martingales. Another one is that eventually I expect that it will go in one direction or the other. So if it's just oscillating back and forth with the martingale, we're not really making any money. But I'm going to start to increase my position over time with the expectation that eventually it's either going to burst out into the positive or negative direction. And that will have different risk-adjusted return characteristic. So that's something that you can kind of back test and you can tweak the parameters a little bit. What I've shown you here is not a martingale. Keep in mind, this is just based on simple reward to risk. So reward to risk strategies that have a good risk adjusted return, generally you're not getting huge returns at the end of the year, but your equity curve looks healthy. So it's something that people would invest into. People generally are not going to invest into a martingale so much or any kind of martingale strategy because the money just isn't safe. But that's something that people like to do on maybe like a $2,000 account. They're okay with accepting huge levels of volatility to maybe get a very good return at the end of the year. And that's just out of my own personal interest to back test things and see if you can get something that's, profitable, even if it has crazy equity curve that's profitable over 12 years.
Got it.
One thing I'm looking at doing with this, people interested, particularly in the economic news, is to put these forecasts against the economic calendar. So you can actually break it down per news release type. Some people like to try and trade intraday, for instance. They think that they can do it. I certainly have never seen a strategy where I think people can trade successfully intraday. But that's. I also make money from the platform, so I'm trying to make this as usable and interesting to people as possible. To accommodate different strategies that people might want to use this for.
So you don't believe too much in scalping the market?
No, because your trading costs are usually much higher than your range that it moves in a given day. So generally, the only time that day trading works is when you have very volatile markets. So maybe today, this year, you would have gotten away with it because it's moving enough intraday to offset the trading cost. But generally, no, and it's also much more difficult to predict on the lower time frames. If you build any kind of quantitative model, they know this for sure. So generally, the intraday traders are the ones that lose money. The ones that are making money in Forex tend to be longer term. But maybe if you use economic news, it might give you enough of a statistical edge on intraday to be profitable. You'd probably have to go and look at the news releases just for this last day to try.
I avoid the news altogether. Like if there's any major news flags on a particular day, I won't trade the pair. Because
so what news will tend to do, for instance, it's very difficult to predict where the pair is going to go or the next day from just news because it's just volatility, right? But over time, your longer periods, what the quantitative models show is that usually you get some predicted performance like 15, 30 days out. So that cluster of news events that occurred like 14 days ago will give you some indication where it's going to be, 14 days later, but it's not going to give you much of an indication like a day later. That's generally what you find. So that's why I'm saying like do it once a week, update your position because that's when these forecasts start to kick in. You get
this information, might be another dumb question, but like this information, how often does it update?
So these generally update once an hour. So most of these basket and technical models update once an hour. Most of these news releases, every day it will process the last 4 days worth of news releases and store a bunch of predictions in a database. So it's the economic news, I would say, is probably up to date every day for the last 4 days. So it's probably reasonable. Like I said, if you're going to scalp the market, you might need higher update rates for this. So I am looking at trying to put the economic calendar in and just show you when the forecasts are getting updated. So you can see, when was the update done for housing prices that was released 2 hours ago. But generally, I was never interested that much in showing economic calendar for the last day again, because I think that forecasting confidence is fairly low at the 1-day mark ahead into the future. So it's just more that people are interested and they've asked for it. So.
Gotcha.
So if you want to basically, I mean, obviously I'm trying to sell subscriptions for this. So I make 5 to 20% a year. And I'm hoping that the market will trend a lot like it did this year so I can make a good return. But I also sell subscriptions to make money off this. So if you want to try it out free for a month, I'm happy to answer your questions by email, maybe give you some additional help, answer your, people have many questions, right? So I'm there to answer your questions. But I ask that you please at least upgrade free for a month to give me incentive to help you.
Got it.
Yeah, that's pretty much it. If you want to help me market this thing also, maybe we can do some affiliate marketing. If you have a good Instagram, good YouTube channel, you have an interesting personality, maybe you can create YouTube videos. I can create a version of this on your own site to kind of give you incentive to sell. So maybe, your trading course, whatever, you create your own trading course, you get a version of this on your own website and try and sell it. And I would get a kickback from that. So these are different ways that we can try and market this. If you have interest in back testing strategies, I can automate strategies for you and tweak parameters and see what works best historically. That's also a service that I offer, and creating your own custom dashboards. Again, if you have your own ideas, you want your own specific dashboard, I can help you with that. But yeah, something quick and simple, try it out, the subscription, please. So I've been doing this for about a couple months now. I've sold 4 subscriptions. So generally, you need a lot of exposure for this, and people have to trust it. So it's a lot of times it's me talking through it, the math behind it.
Honestly, I think the only way to really, not only way, but I think the best way to sell this thing is just to have some success with it.
Yeah,
And
so
for me personally, just looking at it, it seems daunting. I would definitely need to take advantage of some sort of access to it just to even get the understanding of how this would be implemented. And with the strategy that I'm trying to learn and use myself, it seems like it's counter to that, because I'm doing primarily scalping for a very small amount of pips. I'm aiming for like 10 to 20 pips when I trade, and this
Yeah.
seems more like a long term.
it's long term.
Yeah,
I would say that generally scalping doesn't work, is my feedback. So anyone that's sold you a scalping strategy, it's generally garbage, and you're pretty much guaranteed to lose money. Only in certain years where there's very strong volatility, you might be able to scalp the market. So maybe this year you can get away with it.
I would see why you say that. But I've already met a bunch of people who've been pretty successful just by taking kind of a more humble approach with it. I don't want to completely
Yeah,
I haven't had success with it myself, so I can't sit here and tell you guaranteed. But I've met people already that they're doing fairly well. You know what I'm saying? So
you can just see mathematically though, right? If you open an order that has maybe 2 or 3 pips to it,
yep.
for you to be able to make money from that, you'd have to really move maybe 30, 40 pips in a day. So you really have to pick pairs that are going to move enough to offset the costs of the spread. So if you can find pairs that do that, mathematically, I could see maybe it's possible to make money off this.
Yeah. One of the things that we factor in is the spread, and also most of the pairs that we're trading on are GBP pairs, which are extremely volatile. Like you can just look at the ATR and tell that they move more. But even for certain pairs that move less, what I've noticed is that obviously nothing is predictable, but once you get into the habit of gauging supply and demand zones on the chart, you can almost, as long as you're patient and you're not trying to force it, there are certain situations where you can almost see how it lines up and shoots out of certain zones. But I can see how this. I'm not saying all that to discount this. This makes total sense to me. It's just that when I'm looking at this information, like when you were scrolling up and down, some of the stuff I'm just, it's so far beyond what I'm doing, or so far away from what I'm doing, that if I feel like I would have to learn a whole nother language just to try to implement this.
So I guess, for scalping, right? This is a product you're trying to help the customer in any way that they want. If you got an economic calendar for the last day and you looked at all the news releases for the last day, and we kind of just gave you forecast like a day out, that might be helpful for a scalping strategy. So I think that's certainly a certain segment of traders that they are doing this, the scalping. If we could give you the economic calendar and I would show you for each news release over the last day, you know, what's the likely market reaction over the next 2 days, that might be helpful for a scalping strategy. And this certainly at the moment is geared towards longer term trading. So I will look at doing that, and I will add that to the website since somebody else has asked for it. And you can kind of try it out when you're scalping strategy. You would just literally look at the aggregated economic forecast for the last day in the pair that you're trading, and see if it aligns with, you know, the bias in the direction that you're, you know, if the economic news is biased towards the sell side in the next couple days. If I was scalping, I'd want to bias my trades to sell also.
Honestly, if I were to look into this, I wouldn't even try to make it fit my strategy. If you're saying that I can look at this information, I can you know, putting trades based on the information that's here. I'm spending a small amount of time, maybe once per week, to do that, and then maybe making adjustments throughout the week. I would have no problem kind of testing it in a separate demo account and putting it up against my scalping performance. You know what I'm saying? Because right now I'm still in a learning stage, bro. Like I can't sit here and tell you what works and what doesn't. That's retarded. I've literally made no money. I'm still in demo. I'm still kind of learning. I got the base level of the strategy that I'm using, and I'm just learning the more advanced aspects to it right now. And I'm not really gonna. I'm sorry. No. Go ahead. I'm sorry. Go.
So what you're saying is exactly right. Pretty much, that's what most people do. Is they have multiple strategies over multiple accounts. So they usually have a longer term strategy that they'll just touch once a week and kind of, you know, update their positions. And then also occasionally they'll get like good insights, like news has come out or they see a particularly strong movement against a support line, and then they might try and scalp that. And that's kind of their daily job, is more of a scalping. And to do it, I think you need some additional information to do it well. So that's one aspect, is your short-term strategies you would trade on one account. And then you also have your lower risk adjusted return strategies your low return strategies that might have a good risk adjusted return that you would just update once a week. And that's supposed to capture like long-term movements in the pair, and your short-term strategies designed to capture the volatility in the market.
Can I ask you a question personally?
Sure.
You said you've been using this only for a couple of months?
No, the platform I've been selling for a couple of months.
Only the platform you've been selling, but how long have you been using this tool?
So the tool, the economic news models, I've been using for about 2 years now. And I've always used it with the straddle. The other stuff like the support and resistance lines, I've added in recently. And these technical and basket models I've added in recently. So the economic news models are much older. And I said, based on quantitative modeling, I know that they tend to work better a month out. So that's why I've evolved to kind of trade these longer term trending strategies using economic news.
Right.
So, and I said I get around 5 to 20% a year. And that's based upon how much the markets are trending.
You said 5 to 20% a year?
Yeah.
Okay.
So which is typically what you would expect if you're basically making your money off these long-term movements, either to the downside or the upside. Some pairs are just going to trend more than others. Sometimes the market's going to be very quiet and doesn't, you know, move that much. I'm not going to make much money those particular years. But like I said, at least with this strategy, I can throw a lot of money at it, and I know it's safe. I cannot say the same about a lot of these other shorter term strategies. So I'd say on the longer time frames, you may not be making huge returns, but it has very good risk adjusted return characteristics. And that's interesting for things like eToro. So if you're consistently making 5 to 10 to 20, probably 5-10% a year, you have a good equity curve. That's interesting from an investment standpoint. So you can make good money by making a small return each year if you're consistent. That's what I generally tell people to do. So it's like, get investment capital from eToro using a good risk adjusted return strategy. And then with your own money, trade maybe a higher return strategy if you want. Yeah.
Got it. That makes sense.
But definitely, like, I'm open. I'm a resource. If you want to try and improve your strategy in whatever way it is, I can help with back testing, which is something that most traders don't know how to do, or you need a lot of programming skills, but I can help you with that. So if you have one particular strategy or trading style that you like, I can try and help you enhance it. That's useful. Otherwise, yeah, let me know if you have any input on this, if you want to try and work with me, either to promote it.
I'm gonna put thought into it. The issue that I have right now is that I'm knee deep in what I'm doing, and I don't want to like pivot until I feel like I have what I'm doing down.
Yeah,
I have confidence in the strategy that I've had. I've already in my demo account. I've already seen some success, and I really feel like I'm making some significant strides. So I don't want to like pivot strategy wise
yeah.
and take away from what I'm currently learning.
I would say generally just as a trader for your long-term success, have a variety of different strategies that you can rely on. So try and diversify your approach. I mean, I'm not saying don't stop what you're doing, keep doing that, but also try and add additional, forms of trading that are going to help keep your diversification and trading, increase it. So one year, maybe your your favorite strategy just doesn't work very well, but you have maybe that other strategy that kind of helps you break even that year. So just be aware of like different trading styles. I think, what does a long-term trading strategy look like versus a short-term trading strategy? Have familiarity in how to trade both of them. Recommend, but yeah, that's pretty much it. If you have any other meetups that you are hosting, please let me know. And I'm actually partly working now, so I have to get back to work. I'm sorry. It's able to take just an hour break.
No,
Thank you, Andrew.
We'll drop off. Thank you so much. Thank you, Frank. And I'll still have to test it out. And then, Andrea, we have a time for me, maybe this week or next week, spend a couple of minutes on your website. Just
Sure.
Stuff. And then next Thursday, like I said, I have 15, 20 people on that.
Okay.
We're gonna be doing something else, but you can come in and do like last time you did 15, 20 minutes. And then you can use Straddle. But I would also make it a little bit more simpler because a lot of people, how they were asking questions. Just wanted to make sure, mostly geared toward, basically maybe come up with a simple example and then explain like how would it look to a laymo basically.
Okay.
And then dive into this, because then if you go from like a bottom up approach, it'd probably be better than, throw a lot of information at them and then they won't.
So just an example from the website to start off with.
Yeah. So you can do something simple. Let's do something simple, create a straddle, but people understand a straddle is like being put in a call. That's the most important thing. So you create a straddle, say, listen, if you put this here and then you create a stop loss at a certain percentage, and then let's say it's at 2%, and then you have a gain at a 3%, you can make so much money over time period or whatever if you invest in this straddle for based on these factors. Make it 1, 2, 3, 4, 5 steps so that people understand, in particularly, and then I can even probably put up an MP4 and show people how to enter the trades, so this way they understand what you're talking about.
Yeah.
Right now,
I think that makes
a lot of people don't understand how to enter a trade, and maybe also we could work on a little bit on risk management. We can say, let's say if you can use 2% of their their account, or 3%, and then they want to do 1 to 1.5. Let's say if you want to do one, let's say $100 loss to making $150, out of those 10 trades, they make $50 for argument's sake, stuff like that. So we could risk management type of thing. That's where people are mostly interested as well.
Okay. Yeah, let me get some more video content up. I'll try and do some simulations also, I think would be helpful for people.
Yeah, simulations, particularly like, in Frank's case, if you get a pair and kind of walk through how it all works, not necessarily look at the program because it's all machine learning, right? The stuff. So it's, at least how it works on a simple level,
Okay.
All right.
Yeah, it sounds good. Perfect.
Next Thursday, I'll send you the invitation.
Okay, thank you so much. Thank you all for your time.
And then let me
Thank
know.
you, Andrew.
Yeah,
Much appreciated.
thank you. Sorry. All right. I mean, nobody else showed up, Frank. Sorry. I think we're gonna drop out. I just
It's
want
okay, bro.
to check out this quant, website, just to see, what do you think, I mean, I understand it's a little different, but I have
I
access
think
to it
I
now.
think it's interesting. I think it's good. It's just that I'm so knee deep in what I'm doing, bro. Like
You're-
I'm literally studying, and I can see what Andrew's saying in regards to you know, the probability is lower to be successful as a scalper. But I think that that's not predicated on the strategy. I think that's predicated on people and their mentality and how they turn it into gambling when they're doing it. And I'm very guilty of that right now myself. You know what I'm saying? But the strategy works. You can go and back test it all day. It's just a matter of you being in the moment and timing everything properly and just thinking straight, So
Were you able the entrances? Are you getting your entrances at the certain point correctly now? Are you able to enter?
I'm getting better. I'm not the part I'm not getting better at is patience. And that's honestly, that's just indicative of the way that I am. I'm very impatient, I'm very impulsive, and I'm working through that. A lot of times I'll have everything set up, bro. I got all my zones written up properly, everything's lining up, and I don't go in at the right time, or I go in too late, and it's because I'm impatient. Like I want it, it's lining up, and I want it to be on my time frame rather than just letting um the market come to me. It sounds like very cliche. You hear a lot of people say that, and I remember when I first started learning, you hear that over and over, but it's valid. It's valid. It's a problem. It's a problem that people have. It's the thing I'm struggling through right now. But dude, I mean, honestly, I feel like I'm 50-50. And I think about the 50% of the trades that I got right, and it's all because I was just patient. Those are the days that I was cool. I was just like watching it, and it was like, okay, this is what it's gonna do. This is high probability. I'm gonna jump in here, and I wait for the. Sorry, I thought my daughter hers. What you call it? Like I'll see it line up, boom, 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 and I'm in there, and I'm calm. I'm not freaking out. I'm not like trying to force it, and then the shit just comes to me. All my best trades are like that when I was super calm and super patient. All my worst trades are when I got to the market a little bit late. So now I'm rushing. Now I got everything set up, and I'm just like, oh, let me just, it looks like it's gonna do that, and I just jump in rather than waiting on the confirmations. I just jump. This shit don't make no sense, bro. It's a mental problem.
Yeah, I mean, I was hoping Regina's going to be on today talking about DeLorean from IML. I wanted
Is she? What's her experience so far?
She said it's amazing. She's kicking ass.
Yeah.
She's showing.
DeLorean is the one with the it's like with the lines on it, right?
Correct. I wanna ask her, but she couldn't get into it. Maybe next Tuesday.
Yeah, honestly, it's going to be hard for me to do Tuesdays, bro. My favorite class of the week on my thing is on Tuesdays, and I skipped it. I skipped it for this. And I'm probably not going to be skipping it going forward. So
I'll record
maybe if you could maybe if you can ask her when she's available on a Wednesday, if you have time or something like that.
Sure.
Wednesday's perfect for me because it's like they're getting started class. You know what I mean? So there's no real class for me on that day. Dude, I just want to kind of chop it up with her because I actually have access to a harmonic scanner myself. It's not IML's, it's a different one. And I've been using it as a way to practice my finding of harmonic patterns myself. I just compare it to this thing. That's what I've been doing. So it's been panning out. I actually figured out some pretty decent ways of finding the patterns on my own. So as time goes on, I probably won't even need the harmonic scanner based on the way that I'm doing things now.
Like the butterfly, all that crap.
Yeah, the butterfly, the Gartley, the bat, the whatever. But dude, once you start seeing all that stuff and figuring it out and adding it to just a basic understanding of price action, market structure, supply and demand zones, once you do that and you put that shit together, you find reversals, and then you end up like that's how you catch runners, bro. Like that's one of my best trades I was at work and I didn't find it myself. I had the service that I'm using, it sends you a telegram message, okay? And it says, you know, so and so pattern is appearing on so and so chart. So I was at work, it hit my phone. Now I don't like trading at work, but I looked at the picture and the picture was perfect, bro. Like it was like how it's supposed to look. Like and at a good time frame, at like a 4 hour time frame. So I go, you know, I had the chart open already, not to that pair, but I just had it open. So I went to the chart or whatever. I saw it. I I you know I did my top down analysis, got on the 1 hour chart, had everything lined up, and bro, it was like magic. Like as soon as I put it in, the shit went.
How
And I
many
took it and I
was it?
took it on a breakout. And I typically try not to do that. I try to wait for a retest, but everything lined up so perfect. I was like, I'm taking this shit on the breakout.
How many
And I
pips?
had how many pips was it? It was like
80, 90?
dude, it was not. It was like 60 pips, but it wasn't the amount of pips as much as it was the time that it took. It went to 60 pips like this. It went like it just went in one shot. So I was in and out of the market within half an hour with 60 pips, which is great. Which is great. That's like the best case scenario, to be honest.
Yeah, I was hoping that other people would show up and we can do Neo, the other ones, the GCP analysis on your thing, but nobody from the group showed up. I mean, I was hoping that we could all like
It's
chop it up here.
it's hard to do common stocks because well for me, I'm talking about for me, but it's hard for me to do common stocks sometimes because they look so much different than Forex. You
Yeah,
know what I'm saying? Like the I guess because there's more activity on Forex, but like certain things like it looks kind of choppy. So your options, my bad, your options diminish.
right.
Like you know what I'm saying? Like or I should say your amount of zones diminish. So I feel like when I'm looking at it, it's like I'm putting myself in this one position just to wait on this one thing. But
But the
the,
Neo, you called it though. Neo bounced back. So
dude, that's the way it works. And to be honest, I didn't even take into account supply and demand zones or anything because the way it looked, like I didn't even feel like I had to. It wasn't that many options of things for it to do.
yeah,
And
yeah,
the thing I've been playing around with a lot lately is the fib. I have a great understanding of it, but my usage of it in the moment is kind of whack. And also sometimes I wait too long or I watch a fib for too long and I don't adjust the fib, because like when you're originally looking at a chart, you can find a golden zone and all that stuff or whatever. But as the price moves and goes forward, that shit changes and it adjusts or whatever. So like I've been working on that. There's like different there's a Fibonacci time tool that the class that I'm taking, they don't even discuss, but I've been looking into that. And what I've been noticing, I've been back testing it. What I notice is that if let's say you got a swing, right? High to low, you throw the fib on it.
right,
And the way that my team teaches, when you put the fib, like let's say it's in the process of going up,
right,
it has not pulled back yet at all, right? So I'll throw the fib on it, but the fib isn't activated yet. The
right.
fib gets activated when price confirms below the 0.236 on the chart, which is hard for me to just tell you this and not show it to you, but whatever. So once it confirms though, once it hits that point,
Mhm.
you can pull out the time tool, right? And the time tool will give you it's almost like an expiration time, right? And you can, oh shit, hold on. Sorry.
It's all
Sorry. An alert came on my thing. You can't hear it. It's in my headphones.
all
Yes.
right for the
But yeah, dude, like you can kind of gauge, like, okay, if price doesn't hit this point by this time, then more than likely it's not going to completely retrace. It's going to go back to wherever it's at and then shoot the other way. And I've been back testing this thing over and over and over. And like more often than not, probably I would say like 80%, maybe 4 out of 5 times, it'll it'll respect that time tool on the fib. So I've been trying to mix that in with all the stuff that I'm learning, and it worked one time beautifully, and then the other time I relied too much on it. And that's the problem with the shit is that you start learning new things and then it overtakes the basics for me anyway. Like I'll learn something new and I get caught up in it and I try to over apply it when I don't even have to. I could just rely on the basics. So
Yeah. All right. Let you go. I apologize that there was no more people.
that's okay, bro. No problem.
Somebody who logged in and a couple of people logged in and logged out because he confused people. But I guess, you got a little bit out of it. I got a little bit out of it, but I'm gonna
He
have.
needs to, what you told him is the right thing. He needs to get an example. Once he,
I can't. Yeah, people are just like, you can't expect people to be on his level. He's a data scientist. He's a PhD. I'm
right.
not a PhD. I can't understand what he's saying. I can't get it. I could be.
I get what he's saying, but like you need to show people that it's a tool that can be used. What he's showing is like, okay, this is what it is, but he's not showing how it can be used. So why am I going to sign up for something that I have no idea how I'm going to implement it?
Right.
And to be honest, I didn't want to tell him this. I didn't want to be confrontational, but 5 to 20% isn't worth putting it on hedged forex bets. Like I hate to say that, but like I have an ETF account that averages 8% on a monthly basis. Why would I? That shit doesn't make sense to me. Like my whole purpose of scalping is so that I can potentially make like 1 to 2% a day.
Right.
You know what I'm saying? And at the end of the week, I'm looking at a 10% increase, which in my demo account I've been able to achieve. So like it's hard to, that's a hard sell for me,
Yeah.
but
he-
anyway.
Yeah, exactly. He wants somebody. Also, you're making good money on ETFs. What kind of ETFs? Any good ones?
Well, I had honestly, you ever heard of the app Acorns?
Oh yeah.
Yeah, dude, I have a thing that it throws money in there, and bro, it's 8% on average. I've been counting. I keep track of it. It goes up 8%.
Oh, I can't use it because I mean, is it ETF account? You chose ETF account or you chose?
That's what it is. That's the account. It's like you could pull money in and out of it. It's a short-term ETF account. But like if I wanted to, I could just leave the money in there. I use it as like a short-term savings account. That's basically how I use it. And then I have an IRA and a 401k and another thing on top of it. Like I have a whole bunch of shit. I got like 4 or 5 different things going on for saving money.
With stocks altogether for now? No stocks at this point?
No, I'm all in on Forex. My problem with stocks is that I need to have a better understanding of fundamentals. And the only thing that I'm interested in investing in common stocks is for the long term. But I was planning to swing trade them, but bro, why would I swing trade that when I have way more success and I can play into into what I like with Forex? Because
Yeah.
like, dude, for common stocks, you got to do all this research. You gotta know you got to know all the things about the company before you get in, even if you swing trade. You know what I'm saying? Technicals matter, but fundamentals I feel like matter a lot more in common stocks. And then weird shit affects it too. Like, let's say if you're getting in on Tesla, but then Elon Musk says some dumb shit on Twitter, the stock goes down. Like, I don't, that's fucking crazy to me. I don't want to be that's not what I want to swing trade. Forex is way more consistent in its moves. You know what I'm saying? Like, and you don't, it's not a million different Forexes. It's not like thousands and thousands of Forexes. You got a short list. And honestly, you could rock off of 2 pairs. You could literally be in and out on 2 pairs and not have to pay attention to nothing else, and maybe have a couple of other pairs on the side. So your research work, it doesn't exist. All of your work goes into the technical analysis of what's going on. That's it. That's what I like about it the most. On top of the fact that it's constantly running all day. Like right now, it's running. You know what I'm saying? The best hours are London and New York, but right now it's running. So if I wanted to, if I set alerts in TradingView and something lines up, I could look at the chart, see if it's worth the stretch and go in and set my stop loss and let the chips fall where they may.
All right, maybe you know what? Maybe we could set up a group where we could just do a trade view and Harmonic. But I've heard from somebody doing IML Harmonic. They were not successful just relying on Harmonic. It was just hard.
You can't just rely on harmonic. All harmonic is going to do is it's going to show you the potential for a reversal. That's all those patterns are. That shit doesn't mean anything. You gotta put that in an understanding of supply and demand. The whole game for Forex is just understanding that it's you against the banks, and you just want to ride the wave of the banks. The banks control all the major movement in the market. The thing is that they show their hand. How do they show their hand? In previous price action, because you can see where they adjust it. They can't hide it. They can't hide it because the level of manipulation that they need to put into the market to move it is so big that you can see it on the chart. You can see it on the chart. Now I'm gonna tell you this about common stocks, and this is what scared the shit out of me about common stocks. And this is the reason why I kind of got scared away from swing trading. A coworker of mine, he used to trade stocks. Um, he worked for a company that what they did is they got some hard money, right? They got hard money investors, a lot, like they got a lot of capital. They separated it like amongst different accounts or whatever. What they did is they would find smaller stocks where if they all pooled their money together in all these different trading accounts, they could control how the stock would look when you go to trade it. They could put in trades and make it look like it was going to go one way and it wasn't going to go that way. Basically,
Yeah.
basically doing stock manipulation, pump and dump. So my coworker, he was like, listen, my whole game was watching stocks that got popular, seeing movement, and then he would time his trades so that the trade would be put in but rejected, and he would do it over and over so that other people would jump in and they'd push it, and then he would short it and go the other way with it. That was the whole game, and everyone in that room was doing the same thing on the same stock. So like you can go on FinViz, you can do your research, you can find a stock where the chart looks like it's right. But if you have some asshole company out there doing pump and dumps on you, bro, you could just fuck your whole trading account messing around with a stock that can be easily manipulated. With Forex, the only thing manipulating the market are the banks. So they show their hand in past price action. They function on algorithms because they don't got a guy that's just there putting in the trades. They got algorithms set up. Those algorithms are predicated on quarter points,
Right.
which if you don't know what that is, I understand. Fine. They do it based on the Fibonacci. They do it based on a whole bunch of things that you can see time and time again in the market. So not that it's predictable because it's not, but you can see their little like their habits, and then you can kind of just ride their habits, and then as long as you're in and out, you're good. That's it.
All right, man. I'll let you go. Thank you so much for
You
joining.
got it.
I mean, something different, and hopefully I'll sway Regina to come in on Wednesday or something, and I will.
Yeah, dude. I would love to just have a conversation, because in the thing that I'm a part of, everything happens with the keyboard. I just want to chop it up with somebody. I don't care if they're an IML, but not some sort of like, I don't want to like sit through another presentation. I just want to chop it up about like, okay, what pairs are you doing? What's your logic? What's your strategy? That's what
Yeah.
I want to do.
And Regina is new, yeah, so she'll definitely spill the beans, and then maybe she'll help us out to navigate through better trading and stuff.
Gotcha.
All right,
Yes, sir.
brother. Talk to you. All right.
Yes, sir. Have a good night.
All right.